Hello, traders and investors, and welcome to Trade with Raymond. I'm happy you're viewing me today, and I'm happy you've been watching the videos. You've been sending questions, some people have been texting, and so on. Today, as part of the Ichimoku Master Series, I'm having what I call key facts for traders. Key facts for traders. This is because some traders have been calling, and some beginner traders and some advanced traders have been asking about what their expectations should be like. So this video is to clear the air of what you should expect as a trader. Now, there are videos online, especially made by some of our folks, and they talk about people returning 100% of their trading income in a month, in a week, some in a few days. Well, as far as the earth is concerned, everything is possible, but not everything is feasible and not everything is wise to do. And I'm going to give you some very important information here today that is literally going to change the course of your trading. Now, people lose a lot of money because of greed, but greed is important anyway. But people are so greedy that they put $20,000 into the market and they want to return $20,000 at the end of the month. They want to make 100% profit. And I'm going to show you people who have been in this business for a while in terms of trading equities, stocks, forex, whatever you have. And I'm going to show you their results and how realistic their expectations have been and what they've been returned in terms of profit, so that you can literally design your profits around some of this information. You see, this information that I'm going to share with you, these people have been trading for many years. And if you have this information, you will not run around seminars, jumping from one online course to the other and hoping to make 100% of your money. Most of these videos we see are made up videos. Most of these videos are made up with EAs that are able to record the chart, play it forward, play it back, and then those educators put their indicators on it or leverage whatever they have on these tools, and then they tell you, well, I've returned 100%. Some of these traders also work together with fraudulent brokers that are not licensed, and they develop these platforms and they play the games around these platforms, and people feel like, wow, this trader is returning 100% every day, every few days, so why don't I join in making such money? Now, when I woke up the black swan, there's a possibility that at one point there's this burst in market movement, and if you catch the direction, you can make a lot of money. And it happens. I've been in the market where on one particular day, I think it was a Thursday last year, October, a huge move. I believe around October, yeah, a huge move, and I leverage on these pairs, and within 24 hours I was up over 11%. But then I'm not going to tell you that you should expect to make 11% in 24 hours. That's wrong. You have to be realistic. So when those events happen and you're in the market, yes, you make your money, but when you're calculating what a realistic return is, that should not be part of your calculation, because that will not always happen. The normal is what is going to happen. Let me give you an example. Paul Mavani of Mavani Capital. I have his returns reports here. So they started out in 1999. And these people have a lot of assets, a lot of human resource, a lot of technology, a lot of information, a lot of experience, a lot of access to a lot of stuff that you as a retail trader do not have. And see what they're doing. So they started in 1999 in May. They started in May and they made a loss. I think I'll add this in the link so that you can review it for yourself. And then you can also find a lot of this information in Michael Covell's book. And then you can buy the book off the shelf and then online, and you can read and find a lot of these auditor reports are also being displayed there. So in that year, from May to December in 1999, they made just 1%. 1%. Now you say this to an average trader in this locality, or I mean, they're going to tell you that, look, it's too small. I want to make 50%. This is a business of risk. And it's better to sit on your hands than to play the market and make huge losses. With all the information they had 1%. Then the following year, that was 2000, they made 24.5%. Very good return. Some beginner trader will say, no, 24% per annum is too small because they've been watching videos online. They've been watching folks talk about making 24% a month, making 24% in 2 months, making 1,000% in a year. I've seen some accounts that made 1,000% a year, and the following year, everything was gone. It was zero. They had no money. They had to go and get funds from other people to start all over again, because those returns are not realistic. And these key facts are very important to know as a trader. In 2022, January they didn't trade, February they didn't trade. That year was 19%. Then 2023 it was 29%. 2003 it was 29%. 2004 it was negative 0.1%, which was not bad at all. The following year, 2005, it was 32, 21, negative 23 in 2007. Now, for those who have been trading, you're like, well, you must never have a losing year. That's interesting. But these are traders who've been in the business for a long time, have a lot of experience. Some of them have been apprentices and master traders for many years before starting their own firm. And some of them came with friends who have similar experience, technology, and they made 23% in losses. And so somebody will say, well, this is bad, so the system doesn't work, I'm going to change. You don't change what is already working, because the previous years has proven that for over 1, 2, 3, 4, 5, 6, 7 years, it's been working. Then the 8th or the 9th year, you had a loss, and you're like, well, I'm stopping the business now. You need to understand the market, how it works. You do not control the market. That's one thing you have to understand. For most beginner traders, and even some advanced traders here, they believe they know what the market is doing. It's a key fact. You don't know what the market is doing. And therefore, you just have to be on the sideline and wait for a move, and you follow. In 2007, that's when they had that loss. And then 2008, they made 108%. That was good. Then in the following year, they made minus 5, 34 positive, minus 5. The following year after that, another minus, but that one was minus 33. So, I mean, on the average, and then 2019 first, COVID, they had minus 21. 2020 had plus 18.5. Okay, let me get the figures right. Okay, 18 for 2021. 2019, sorry, 2019 they had minus 21, that's COVID. 2020, still around COVID, they had positive 18. Then 2021 they had 32, 2022 they had 89. So last year, that's 2022, they had a huge figure, 89. And these returns are realistic. Okay, that's what you should be expecting. That you're not going to have a smooth glide all the way up. You're going to have losing days, losing months, losing years. There are some organizations that have had 3 losing years straight in a row, but they are still in business, because when they make profit, it's properly managed, and they manage their losses. For some traders, they are always interested in returning 100% a year. 100. That is not a professional way of thinking. I mean, some of these fund managers, when you take your fund, they don't even give you an expected return because they don't have control of the market. So if you are starting out in trading and you are watching those videos where you're told that you are going to become rich overnight, who wants to be a millionaire, start trading. No. Most of the people who come to me, I tell them, be realistic, be gradual, go on a step-by-step approach in your trading. Don't expect too much, and grow your capital gradually over a long period of time. Oftentimes people are like, well, it's a cake, Let's find somebody more modern who can give us some, fancy magical stories. So they end up losing rather. You have Berkshire Capital. That's where we have Warren Buffett as Berkshire Capital. Performance against the S&P 1965. 1965, before I was born. Now in 1965, they returned 49% against the S&P that returned 10%. Then 66 minus 3.4, 67 plus 13, 68, 77. Then let's come to 74 minus 48.7. That's like minus 49%, almost 50%. This is a huge number that was lost. A huge number that was lost in trading. But if you look consistently, there was a time that they made almost 80% in 68. And they kept that. They managed their funds well. What we see online today is somebody makes, let's say, 50% per annum. They go out and buy fancy stuff. The whole world hears about them. They splash money on their screens, and then the second year they go broke. Which of these traders, proper traders, do you see splashing money on the screen? The business of trading is not a business of entertainment. And most young traders come into the business looking at the entertainment side because somebody makes it look entertaining. Those are not traders. Those are content creators. So if you're learning trading from a content trader, you're in trouble, because they want to create content so it's exciting for people to come and watch, and they create wonderful content, and they go ahead to even offer classes. They go ahead to organize Telegram groups, and they're selling signals they buy from another person, from another person, and from another place, and they retail the signal. And after a while, the signal stops working, but then you have paid dollars, a lot of dollars for the signal service. And those people never push a buy or a sell button. So it's a key fact to have that this is not an entertainment business. A serious business. Trading is investing money. And if Warren Buffett, who's been in the business for a long time, can have a loss like that, that tells you that this is serious business. It's not about entertainment. So anybody that's making you feel, you go to a seminar and so much is taken away in terms of fees, and then the room has 1,000 people. How can you possibly learn how to trade with 1,000 people in a room? That's not possible. It's not possible. Trading is not that way. It's not done that way. So guys, when you decide to come into the business of learning to trade, don't go after content creators. Don't go after fancy car showing, money throwing, watch showing people to learn trading from. They are not going to teach you trading. They are rather going to teach you how to create content. Or you're just going to follow them for them to have a bigger content and advertising coming through their content and making money off you. And then for most of them, they are rather making money selling content, and then they come and tell you they're trading. So if you want to be a profitable trader, you really need to go through a process of learning. After you learn, you practice and show your results to a good mentor who has experience in the business to look at the results and advise you. I had a trader once who was, in a month he had made about 100%. And so look, that's not how we trade. You're risking too much. Well, he felt very confident and very overconfident. And the next month he did that again. He was excited. By the 5th month, he had no money to trade. Everything was gone. Because he rearranged his psychology, believing that, well, he could make 100% all the time. And that was the end. He's not come back to the business of trading again. So it's very, very important to balance that, to understand the realistic aspect of trading. I have done that before. When I started in my early times of trading, I was in a rush. I was very aggressive, putting a lot of bets. After a while, I was bent. I learned my lessons and did a good research, read a lot of articles, read a lot of financial statements, read a lot about those who've been trading many years before I started and how their incomes were coming in, how they managed it. So if you can do this, then you can live and trade another day. Going back to the performance here. So let's jump to somewhere in the 90s, all right? So in 1990, all right, let's say 1990, okay, they had another 84. 1990, they had minus 23. Okay, then 91, 34, 35% profit, 29, 38, 25, 57. I mean, several years of profit. And then they had a loss in 1999. Okay, 1999 they had a loss of almost 20%. 2000 they had profit of almost 27%. Then let's see COVID. What did they get in COVID? 2019 they got 11%, and 2020 they had 2.4% for 2020. So this is how you trade. Results must be realistic. If any mentor is telling you that you should be targeting 40% year in, year out, that's not a trader. That's a content creator. That's an education selling, a person selling you an educational program to make money off you by telling you, look at making 20% every year. No, 30% every year. We do not know fully what the market is going to do. So the market can return you more or less. And if you have a bad system, you're probably going to, when the year is bad, you're going to make more losses. So in this Ichimoku Masters, I just wanted to make this clear to you. So when you're trading, you are realistic in what you are expecting, and you are methodical. Find a good mentor. For me, we organize a very solid trading program and training program. Solid training, realistic approach to trading, and realistic expectations, and trading small so that in a bad time or in bad times or during a bad event, you can live and trade another day. So thanks for watching this video. I believe it's an eye-opener to you, so you know, be jumping from seminar to seminar, webinar to webinar, cash throwing, vehicle showing to vehicle showing, watch splashing and things like that, so that you can focus and grow as a trader. Call me, send me a text, like, share, send me a message, visit my office. We can improve you so that you can become a trader that is profitable, realistic, methodical, and focused. Thanks for watching. See you. Bye-bye.